Well, welcome to another episode of Breakaway from the Rat Race. And today I have the pleasure of speaking with Brian Will. Brian is a serial entrepreneur, an industry-leading business and sales management consultant. And during the course of his career, Brian has created or co-created 7 very successful companies in 4 different industries. These companies were worth over $500 million at their peak. And so this is phenomenal growth. And Brian also did multiple turnaround projects for companies from startups to Fortune 500 and helped those organizations drive billions of dollars in sales. Today, Brian owns a growing chain of restaurants in the Atlanta area, as well as an insurance and technology company based in Denver, and residential and commercial real estate businesses in Georgia and Florida. Well, because I coughed doesn't mean I meant something by that. I just really something in my throat. So Brian, welcome to the show.
Eric, I appreciate you having me. This will be a good show today. I'm going to have fun.
Yeah. So as we talked, I have a lot of people that are they're interested. They know they have to do something. They know that but they don't know where to start. They're doing their day-to-day job, and then they get home. They're tired and they don't want to be thinking about doing business and stuff like that. But tell us, kind of like inspire some of these people to say, no, this is why this is so important for you to change your mindset and to start doing a business.
I think, and I tell this to a lot of people, the first thing you have to do is figure out what it is that you want in life. And is the job you're in going to get you what it is you want? And then you have to figure out why you want it. And that why has to be strong enough that you're going to go out and overcome and do the things that you might not want to do, or you might be too tired to do. You've got to have a why that's strong enough that'll push you past that. But even that starts with a want. What do you want? If you're happy with your life, then you're happy with your life. But if you're sitting there saying, look, I make $100,000 or $200,000 a year and I really want to make $1 million. Okay. If that's what you want, then you need to go figure out how to do that. So what is it you want? And then why do you want it? That's the very first thing you got to figure out before you launch into a new venture.
Yeah. And I think once you figure that why, I think you kind of have to emphasize it. I think you can say like, oh, I want to be financially free. I want to be able to quit my job. I want to be able to take 6 months vacation every year or something like that.
Mm-hmm.
But, these are kind of like, okay, that's kind of nice. But how do you kind of like twist the knife into that why, put a focus on it, and to really kind of like really drive it emotionally, where you really feel like I have to do this. It's not just like something that I put on my whiteboard.
Well, see, that's part of the challenge we have with a lot of people. So that why almost has to be ingrained into you, and that desire has to be ingrained into you, because if it's not, and you're just going to do something namby-pamby, then it's probably not going to work, right? I'll give you an example. I have a friend who is a business broker. He's sold, I don't know, I think 3,000 or 4,000 different companies over the last 15 years, right? And he told me this story when he was on a podcast with me about this gentleman who bought an ice cream shop because he thought he was going to, he took his golden parachute. He wanted to buy a business. He bought an ice cream shop. They closed the deal. The first day he showed up at the ice cream shop, a tornado hit his town. It didn't destroy his business, but nobody showed up and things were blowing around the streets and one of his windows broke. And by 4:00 that afternoon, the guy handed the keys back to the previous owner and said, I quit. I don't want to do this.
Oh, wow.
Okay. His drive wasn't strong enough to get through one bad day. Mm-hmm. And you got to understand, if you're going to go into business, there are going to be some challenges that you're going to go through. And you need to have the internal fortitude to understand that you're going to have to go through those if you're going to succeed. Mm-hmm. You can't quit. Once you make that decision, you got to go. But if you're not ready, and if you think maybe I want to do it, maybe I don't, then maybe you're not ready right now. Right. Because I don't want you to do this, halfway and invest a bunch of money and then mess yourself up and lose your money and, put your family under stress. If you're not ready for it, then you're not ready for it. But if you are, then man, let's get up and go. That's what I tell people. In fact, I almost tell people, Eric, I almost try to talk people out of it, because if I can talk you out of business, then you never should have done it. Yeah. But if I can try to talk you out of it and you get mad at me, that's the person I know that's got the drive to make it happen.
Mm-hmm. Yeah. I mean, I think it's very important, because people think that, they look at, and they look at you And then they would say, wow, this guy owns like a chain of restaurant. How can he have time to, speak with me and spend like 45 minutes, an hour to talk about this and share your experience with people? When you're running a chain of restaurant, you have other businesses that you're dealing with and stuff like that. And then it makes it look so easy. But at the beginning, when you got started, I mean, you had to encounter and solve problems and then kind of like fix these problems so that they would kind of like, they wouldn't be in your way anymore. So so you kind of have to put things in perspective. So how do you tell that kind of story to these people?
Listen, it's always easy to look at the present and think that that's the way it's always been, right? I always joke that I am a 20-year overnight success. It took me 20 years of struggling and fighting and learning and failing and growing to get to the point where we had businesses that were self-sustainable. Today, I can tell you my restaurants, I don't even go to most of them. Mm-hmm. I have one I haven't been to in a year. Another one, it's probably been, I go there every 3 or 4 months because I have put good teams in place to manage those businesses. When you talk about being busy, one of the things I've always been good at, and I try to teach people, is building a business that doesn't require you to be there.
Yeah.
And if you can do that, then you can create money and lifestyle. Now, that's not how you're going to start. When you start a business, you're going to be working dark to dark, 7 days a week, 100 hours to get that thing off the ground. But if you'll build it correctly and you're willing to make a little bit less money and you're willing to have belief in the people that work for you, then you can build something that will, like right now, I'm sitting in Park City skiing. This is my 3rd trip. Mm-hmm. And I've got another one coming up in March because I know that I can run my businesses from my phone because I have good teams in place. Yeah. And that's the ultimate goal, is money and lifestyle. So it's not easy to do, but it's possible. You can do it. You just have to build it correctly.
Mm-hmm. Yeah, absolutely. So I think one of the books that I really like was called E-Myth. I don't know if you've read that.
My favorite book.
Yeah. And it was really about that. Even when you start your business very, very small, you realize that you're wearing different hats, and these different hats, eventually you want to give these hats to other people. And you want to delegate these hats to other people. And this is kind of how you move forward and how you scale up.
In fact, my book, The Dropout Multimillionaire, I would say the genesis or the base of my book is based on 3 books. The E-Myth, which is a book I give every single person that wants to start a business. And they're like, I want to be an entrepreneur. What do I do? And I give them a copy of the book for free and say, read this book first because it's critical. The second one is Rich Dad, Poor Dad. I think that's an excellent book for new entrepreneurs. Yeah. And the third one is Blink by Malcolm Gladwell. Those are my 3 base business books. Because if you really understand the principles in there, you understand what I'm talking about. And those books are all weaved in and out of my book. So if you read mine and you've read those, you'll see the similarities.
Yeah. So tell us a little bit about your book and why you wrote that book. I think you had like 37 lessons of to be
how to succeed. Yeah, 37 lessons in how to succeed in business with no money, no education, and no clue. Mm-hmm. And that's because that was me when I was 21 years old.
Yeah.
I had no money. I'd failed out of high school. Mm-hmm. I managed to graduate, but with a 1.2 grade point average. No college, no discernible skills of any kind. Clearly not that smart, you would think. Tried to hold jobs down, got fired as a waiter, got fired as a construction worker, got fired at an auto parking car lot. Finally took a job as a busboy when I got married. And then started my own business shortly after that because I considered myself unemployable. I was such a bad employee.
I think it's kind of a sign at the beginning when you're such a bad employee. I think it's a sign that you might be an entrepreneur.
You might be. So I spent all this time building companies over the years. And by the way, you only mentioned the successes. There were a lot of other failures in there that weren't mentioned. Even in the restaurant business, I'm 7 for 13. Oh, that means six of my restaurants, as smart as I think I am, failed, and some of them big.
Yeah.
But we learned on every single one. Most of the failures were in the beginning.
Yeah.
But after 30 years of building companies, and I sold 2 to venture capital groups, and I sold 1 to a private equity organization. Then I started doing consulting, and at one point I thought, I have seen so many entrepreneurs fail when they start a business. And in fact, one of the things I say in the book is that 500,000 people every single month start a business in America. That comes from the US Chamber of Commerce. That's 6 million people a year.
Yeah.
And we know that 70% of them will fail. That means 3.5 million people every single year start a business that will eventually fail.
Yeah.
And we know the ones that didn't fail, only 60% are making money. And I kept looking at all these people that are failing, and I said the reasons are all the same. They're failing for the same reasons. And if I can write a book about why these people are failing, then maybe we can help some of those folks not fail, right? And the book is nothing about the technical side of business. It is all about the mindset, the soft skills, the way you need to think. One of my favorite sayings is the only difference between a rich man and a poor man is the way they think.
Yeah.
And when I say the only difference between me and you and Elon Musk is the way he thinks and the way we think. If we thought like him, we'd be him. So if you want to succeed, you need to change the way you think. That's all there is to it. And that's most of what the book is about. So that's why I wrote it.
So can you share one or two of these, the lessons that you have in your book?
Yeah. So I start the whole book with failure, and I call it your success filter, right? Yeah. And so I think this is a critical one. And by the way, you'll see weavings of Blink in here. And the success filter says that every single bit of information you've ever taken into your brain since the day you were born, your parents put information in your head, and that made you think the way you think. You went to school, your teacher started telling you things, that changed the way you think. Your peers, through peer pressure, made you think different ways. You went to college, your college professors put information in your brain and made you think different ways. You get a job. Here you are today, and you're going to start a business, and you have this subconscious filter that you're not even thinking about. Yeah. And when information comes at you, right, it goes into that filter, and that filter either accepts or rejects that information based on all of your history. And actually based on all of the history of the people who put the information in your brain before you. So it's accepting and rejecting that information. Much like you have people right now listening to this thinking, this guy has no idea what he's talking about. They're rejecting everything I'm saying because they think I'm crazy, because their brain will not accept it, because that's just the way it is. Now, here you are starting a business. You've had no business experience. You have absolutely no idea how to succeed in business, period. I don't care if you worked for corporate America and you ran a division. You have no idea how to run your own business. Your filter doesn't understand what information to take in and accept and what information to reject. So if we understand that our filter isn't capable yet of making good decisions, then you need to find somebody who can help you make those decisions. We call them coaches, mentors. Join a mastermind group. Find somebody who's 10 steps ahead of what you want to do and ask them for help. And they can come back and say, well, based on me doing this before you, this is what I would do. And now you have accurate, successful information that you can put in your brain to make the decisions you need to make in order to succeed at whatever it is you're doing. That was a long answer to your question.
No, I mean, this is great, because I think this is true. People think that their mind is has been formed, like in their opinions has been purely independent and a complete intellectual exercise. But in fact, you've been molded by everything, your whole experience, the people talking to you, their opinions, people you respect, people you don't respect. All of that is forming and shaping your ideas and your point of view.
And it's interactive. It changes every single day. If you read a book today and you accept that information, it changes your filter. That's why reading is so important, by the way. I've probably read 1,000 books on business and success and all the greats. It changes every day. And that's why it's easy to succeed if you'll get your ego out of the way, understand that you don't know what you're doing, take advice. Oh, and by the way, you have to listen to the advice you're taking and not reject it. And your chance of success skyrocket. So that's a big theme throughout the book. It's your personal filter. You ever seen people, Eric, no matter what they do, they seem to fail?
Yeah, exactly.
You go, oh my God, that guy everything he touches falls apart. And I bet you know people and you say, man, everything that person touches, it turns to gold. Yeah. It's because of their filter. That's all it is. It's the way they think, the way they accept information and what they do with it. You need to get a success filter. Yeah. That's the deal.
So what kind of advice, like where would you look for advice if you're getting new to this and you want to invest? I mean, for us, we have a lot of real estate investment, and we're coaching a lot of people how to invest in real estate. And then, so who should they listen to? Who should they follow to get their advice and get the right information into their brain that they can accept.
You literally just said it. You need to find a coach, a mentor, or join a mastermind type of organization that is full of people who are doing what you're doing successfully. Listen to them and take their advice. If you're a coach, Eric, you're doing exactly what you need to be doing, which is helping other people. You're reaching down and pulling them up, right? And I use this example, and I typically close podcasts with this, but I'm going to do this one right here, right? Yeah. So what kind of phone do you have? I have an Apple. You have an Apple phone or an iPhone? Okay, you have an Apple. So Apple phones made by Apple, right? Do you know who the CEO of Apple is?
Yeah.
Tim Cook. Tim Cook is the CEO of Apple. And do you know that Apple, and by the way, pretty much every single major corporation in America, in fact, every major corporation and almost every company below that has a board of directors, right? And I assume you know what the board of directors does. The board of directors comes in maybe once a quarter. And I like to say they come into Apple and they go to the giant boardroom and they sit around that big table and they got their Jimmy John subs, you know, and they're like, okay, Tim, we're having lunch here. Let's tell us what's going on with Apple. And he says, well, you know, we got this issue with Foxconn, who makes the iPhone over in China. We're thinking of pulling out. We got this tax issue and we're thinking of borrowing. And he throws all the stuff that's going on. And this board of directors is people from different backgrounds and different organizations, but they're all super, super successful people who have overcome challenges in their own businesses. Yeah. And after he tells them everything, they all throw in their advice and they say, based on everything you've told us, this is what you should do, right? That's the way it works. And at the end of the board of directors meeting, Tim says, thanks. He goes back to his office. He takes all of the advice he's been given and he uses that advice to move Apple forward. Now, Tim Cook's got to be a pretty smart guy, right? Yeah. He's running the biggest company on planet Earth. Yeah. If Tim Cook needs a board of directors to help him make decisions, what in the world makes you think as a young entrepreneur, you don't need at least one person to help you? Yeah, exactly. And that's the key. Yeah. Go find the person that can help you. And by the way, it's probably not your friend. It's not your relatives. It's not your mom and dad. It's somebody who has had success in business that can help you make those decisions. And if you don't do that, your chances of success go way down or your learning curve goes on forever. Yeah. So find the right person, vet them out. Don't take one of these $149 certificates off of the internet to make you a life coach or whatever, who have never done anything. Yeah. That's not going to help. Find a real successful business person and ask their advice. I get people call me all the time. Hey, Brian, ran across your book. Would you sit down with me for 30 minutes? And I'm always like, sure, I'll sit with you for 30 minutes. Yeah. I usually tell them to read my book first, but sure. So go find someone.
Yeah. I mean, that's exactly true. I mean, this is, and, you know, and ideally the people you hire, they have more experience. They're smarter than you are in that particular.
Hopefully.
I mean, this is what you want. You want to surround yourself with a team that's going to pull you up instead of you having to constantly train them, fix their mistakes, and, you know, kind of, so find someone that's going to be, you know, that's going to take care of all that you can delegate, and they're going to take responsibility and move forward with it. Ideally,
100%. The key here is don't let your ego get in the way of your own success. Yeah. Right.
And also, yeah, there's the ego, but there's also sometimes the price. You're kind of like, especially you look at, you know, Upwork and all of that. A lot of people are sending, you know, having people like virtual assistant do some work and stuff like that. Often this requires a lot. It's cheap on one hand, but on the other hand, you have to do a lot more hand holding. You have to do a lot more training and spend more time with them. So it really drags you down for the most part, unless you find someone like very unique, then, you know, that works out. But that's,
I think the VAs are good for mundane tasks. Yeah. Right. I had a VA schedule this with you today. That's a basic task that she does for me in scheduling, but she doesn't work in my office doing the stuff that I need done every day. So I think there's a balance there.
Yeah. Well, exactly. Things that are more, you know, definitely more mechanical and stuff like that, than having a VA do that. I think that's fine. But my point is kind of like, don't be cheap on the resources. Find the right person, and then that right person, even though you might be paying a little bit more than you thought, it might actually make you more money in the end, and at least clear your mind. At least you have delegated a piece of the responsibility, so you can focus on something else.
I'll take that one step further, Eric, because I see this a lot also, particularly with entrepreneurs, because they tend to be A-type personality, hard drivers. I want everything done today. I'm focused. I'm getting the job done. And I see a lot of times the challenge they have is they don't trust the people that they bring in to do the work. And you find a lot of these entrepreneurs are in there doing the work for those people instead of letting them do it. Right. Mm-hmm. So I always tell people, if you've brought somebody in who has talent, let them use their talent. And if they fail, you need to let them fail so that they learn the way you want it. So that in the future, you don't have to do it. Whenever you see an entrepreneur doing everybody else's job, this is a person who won't trust their staff and they're going to get into burnout mode really quickly. So got to trust your people.
Yeah, absolutely. I think, again, it's about hiring the right person that is, that's that expert that knows more about that field than you do. And then, and then, you can monitor and all of that. Now, the other thing I want to talk about is kind of like the different businesses. I know you've done a lot of different businesses, and you have also in different industries. So tell us more about kind of like the businesses that you're in today. Any kind of maybe the reason even on why you decide to go in that industry versus another one. I mean, you have a chain of restaurant. I know. And everybody that we talk to, they say, don't go in the restaurant business. Don't go in the restaurant business. And here you are, you have a chain of restaurants and stuff like that. So tell us more about that.
It's a matter of learning how to do whatever it is you're doing. And I'll tell you, the first business I started was a landscaping business when I was 21. And the reason I did it was because, as I told you, I had no education. I had no discernible job skills, and mowing grass and digging holes was easy. That company we had for about 10 years and then transitioned to insurance. Story behind that, but worked at an insurance agency for literally 6 weeks and realized I didn't need to work for an agency. So started my own business again. Year and a half later, sold that to a venture capital group only because it was the dawn of the internet. It just so happened I had built something somebody wanted. Once I had done that and got some experience in venture capital, I went and did another one, sold it to another venture capital company. Then we built another one, and this time it was in the internet. And by the way, I had a partner in all of these. And I brought in a guy who knew the internet while I knew operations. So he built the internet while I ran the company. We sold that to a private equity firm. I started doing consulting after that because the funny story is, here I am sitting in a boardroom of a multi-billion-dollar company, and I'm telling them what they're doing wrong in their sales organization. And I'm laughing because 7 years earlier, I was mowing grass. And now I'm standing in a multi-billion-dollar company talking to a CEO about what his organization's doing wrong. So it's funny, once you've had success, how people suddenly think you're a genius when you're the same person you were a couple of years ago. I learned some things, but still. So then I consulted for a while, and it's kind of a cliche. I bought a restaurant literally because I was sitting in it with my employees. I love to go out on happy hour. And so we were sitting there and they were joking I should buy a restaurant. Turned out the one we were sitting in was for sale. So we bought it. And it was a toy. And the first year, I think we lost $50,000. And after a year being an entrepreneur, I thought to myself, what the hell am I doing losing money? I can figure out how to run a business. So I dove into it and started learning, bought a couple more, both of them failed. But then I bought another one that was successful and I started learning from it. And then another one and another one and another one. And it just kept going from there. So it's literally a process of learning from failure until you figure out a system. And I am a systems guy.
You learn more from success or from watching something that's successful or from something that failed?
No, you learn from both. Remember the filter we talked about. As I like to say, failure leads to failure. Learning from failure leads to success. So, and by the way, everybody starts their journey of success and failure at a different level. Remember, I'm the kid who failed out of high school. So my journey started at -10, right? You may have an MBA and venture capital backing and your parents are entrepreneurs. You're starting at a 50 where I was at 10, -10. All that means is I got to fail a lot more than you do because I have a lot more lessons I have to learn. But as long as I keep pushing through and learning from everything that I do, eventually I'll figure it out, right? So, but the success, this is why we talk about bringing in a mentor or coach, right? If they can teach you how to be successful, that goes back into that filter. And now you have a success thing in there that you can use to process information with. So you got to learn from failure and you got to learn from success. I think that's just the key here.
So how do we, so let's say you have some of our listeners, maybe they have a business idea or they have a business that's doing okay. And then, so they say, well, like I would like to really I know that some of these things are failing and all of that. So how do I fix the things that I think are failing? And it may be a bigger question is, how do I add and make my business more valuable? How do I add value to the business? I've come from real estate. For real estate, it's very simple. You increase the rent, or you you renovate it, and you added value. But in a business, in a business that is not as real as real estate, so how do you add value to restaurant? How do you add value to other things that you've done?
So I like to say you are who you are, and who you are got you where you are. And you're not going to go any farther until you change who you are. And the only way to change who you are to get you where you want to go, I hate to be repetitive, but it's to go find somebody to help you do that so that you can learn how to be better at whatever it is you're doing, right? Like I give you an example. I go in and I see people all the time when we evaluate companies. And the very first thing I'll do when I walk in is I say, all right, let me see your numbers. Show me a set of P&Ls over the last 24 months, month by month, laid out beside each other on an Excel spreadsheet, so we can go down every line item and start look at the trends in your business on every line item. And it's amazing to me how people don't have that. Like I had a kid, I told you about people do this all the time. He called me and he said, hey, I've got the #1 burrito shop in Gainesville, Georgia. I am the next Chipotle. I've won awards for my food. Can I sit and talk to you? I said, sure, meet me at my restaurant. I said, but first read my book. So we set an appointment up about 10 days later. I show up at the appointment. He sits down. I said, hey, Matt, how you doing? He goes, almost didn't show up today. I said, why not?
Wow.
He said, well, because I read your book. I said, and he goes, and I know the first question you're going to ask me. I said, what is that? He goes, you're going to want to see my numbers. And I said, that's exactly right. Do you have them? And he said, no, I don't. I said, Matt, you told me that you were going to build the next Chipotle and you're looking for investors and people to come in and help you, but you don't have a set of P&Ls. I said, did you make money this year? He goes, I don't know. I said, did you make money last year? He said, I don't know. I said, wow. Did you file your taxes? He said, yes, I did. I said, did you pay taxes? He said, no, I didn't. I said, then you didn't make any money. I said, how did you pay your bills? He said, my wife has a job. I said, Matt, there's nothing I can tell you. There's no help I can give you until you get your finances in order. So go create a set of P&Ls, bring them back to me, and let's take a look at your business. Matt never did that, and that business closed about 6 months later.
Oh, wow.
Right? Wow. So the very first thing you need to do if you have a business that is struggling or not growing, maybe it's not struggling, but not growing the way you want, get a copy of those P&Ls, lay them out, start studying those patterns, right? We call it pattern recognition. Yeah. And if you're not good with numbers, get somebody to come in and look at it and tell you what you're doing wrong. That's the very, very first thing you need to do. Because I have a whole speech I do called Your Magic Crystal Ball and Time Travel. Your P&Ls give you the ability to travel in time ahead of your business. By looking at your historical patterns, I can tell you what's going to happen. It's like clear as day. I don't even need to go and see your business. I can tell you what's going on just by looking at those numbers. So the numbers are the key. And if you're not a good numbers person, find someone who is and have them look at it.
Yeah. And that's exactly, and that's what we're doing also with with our turnkey business. We do like a lot of projection. What are numbers? How many houses we're going to sell this year? How many per month, etc. And then we kind of go all the way down to the net profit. And then we say, well, what is the gross profit that we need to make for each of the houses?
Yes.
What gross margin we need to make for each house in order to be profitable. And we kind of work backward that way. So
always work backwards. You're right.
Yeah. And every house that we do, we know that, oh, if we didn't make this much money, we say, well, that's not enough. We need to, the average needs to be a little bit higher. So we know where we are for every single transaction that we do. We know that because of that, we've made this backward calculation to figure that out.
Let me take a shot in the dark here. Yep. And I'm going to guess that you have some type of Excel spreadsheet with formulas built in that you can just plug numbers in to give you the data you need. Is that right?
Yeah, absolutely.
And that data that formula, that spreadsheet, that's all based on your experience and your history of saying, I know how to make money. Yeah. Where a lot of people that are trying to do what you do don't have the spreadsheet, don't have the formula, don't understand, the percentages, and they're struggling to do what they do when you've just got it like that, which makes you a great coach because you can walk in and say, boom, 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 this is a bad deal. Don't
Yeah,
do
and
it.
as you know, I mean, the real estate business is very like cash intensive, right? So you have like
Mhm.
a lot of cash coming in, and you feel like, oh, I have a lot of money, but you also have a lot of things that need to be paid to contractors and all of that. If you don't have the money to pay the contractors, everything grinds to a halt. So
Yep.
you want to make sure. So we had like I had a big tool that was projecting cash flow for the next 6 months and
Yep.
telling me like, okay, well, yeah, we're good, we're good, we're good, and then we're going to be below reserve, so let's just push this, pull this in, do some things, delay construction, reduce acquisition and stuff like that. But that was critical to make decisions to make sure that we didn't end up in a situation where we run out of cash and all of a sudden we have to go and get some very expensive loans in order to pay for construction and get the momentum going again.
Is that proprietary or is that off the shelf?
That was proprietary. I mean, I custom built this like from scratch, and
That tool's worth a fortune if you sold
yeah, yeah. So yeah, I have it if anybody's interested.
it.
And it was connecting right from from other spreadsheet that we had and all of that. So we had a dashboard. Yeah, so it's very sophisticated, and it was.
I mean, that's the kind of tool you can take brand new real estate investors and say, okay. And I see this guy, Chris Crone, he's got this same kind of stuff that he sells where you can sell that to people and they can start plugging it in and realize, tell me if I'm wrong, but a lot of new real estate investors make bad decisions, bad properties, bad acquisition prices because they don't understand what it is you understand. If you've got a simple spreadsheet formula driven product, I mean, that's worth a fortune.
Yeah, absolutely. And this is what we're doing with the CRM. We're building an application also, like a separate application with our other company called Flip System. And that application basically does all the calculations for you. So that you basically enter all your information and you're going to know, okay, well, this is how much you're going to make cash on cash return. If you're going to do a refi, this is how much you're going to make on your return. If you're going to sell it, this is your profit, your annualized return there, and then help you make the decision, but also helps you negotiate. Because if you have all the numbers that you're saying, and say, well, if I buy it at this price, if I buy this house at this price and I have to put $35,000 in renovation, blah, 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 this is how much I make. Well, this is below the margin that I'm looking for.
Yep.
So I need to negotiate the price down with my with the seller, or I need to have a tighter budget or something like that, and then to make sure that the numbers work before I buy. And this is something that's fairly new to a lot of real estate investors. It's kind of like work backwards.
Yep.
This is my target. I want to make this much money, this much profit. Well, then work backward. And this is the renovation. So how much do I have to buy this property in order to make that target?
Yep. That's good stuff. Good stuff.
So I think that's kind of how we do it. So how do so this is great. Also, in terms of one of the things that you talked about ego, right? We talked about kind of like how you're getting advice and all of that, and sometimes you see shows on TV about like Lemonis, for example, where he's trying to help a company get out of trouble, but you can see like the ego is in the way of these people, and they are, they're listening, but they're rejecting all the ideas that he's presenting. So how do you keep your ego in check, and kind of like you have some good ideas, but also you want to be able to allow external influence to actually guide you and help you grow and have a better ego, I would say, better information to drive your business.
It's very difficult. It's very difficult. It's difficult to do that. I mean, I'll give you an example. Even me, and I'm a guy out here preaching, get your ego out of the way. I'll give you an example of myself. When I wrote the book, The Dropout Multimillionaire, I designed a cover for it and I sent it over to the publicist, and she sent it back and said, "This sucks." And I said, "What?" I said, "No, this is good. We're going to go with this." And she said, "No, it's not. It won't sell. This is terrible." And I literally argued with her for just long enough for my own filter to go, wait a minute.
Yeah.
She's done hundreds of books. You've done zero. Okay. Yeah. Maybe you need to check your ego here. And I did, because it was a conscious decision, and the book cover came out great. And it's done really, really well. But you get down to what I call emotional thinking and cerebral thinking, right? If you're thinking with your emotions, you're wrong. You need to think from your head, not your heart a lot of times. And this is where your ego is going to get you in trouble, because your ego is all in your heart. It's like, oh my God, I'm right. I'm doing this. But you got to figure out how to get that in check. And I don't know how to do that with some people. I have somebody I'm working with right now who I can't, he has read my book. He quotes my book, and yet he still won't listen to me. And it just amazes me. It's like, did you read? Yes, I read the book. Well, did you not listen? I don't know what to do with him.
Yeah.
So you just got to figure that out.
Yeah. So Brian, let's talk about kind of like the economy a little bit, but not in the details. But I think this is a great time right now to invest, or it's about to be even better time to invest, but really to start looking at what opportunities that are out there. I spend a lot of time looking at opportunities in real estate, but I'm also open to other kind of opportunities out there. I'm also looking at, you know, other businesses that I would like to buy, and then kind of jump in there and inject maybe some funds to see them expand, see them be successful, and partner up with some other entrepreneurs out there. What do you think the economy? What do you think? Is this a good environment, you think, right now to do that? What sector or which sectors do you think are going to be the ideal place to invest?
So my favorite term for investing in businesses is called distressed owners, not distressed businesses.
Yeah.
If you can find a good business with a distressed owner, then you can get a good deal. I'll give you an example. And I'll go back to the restaurant. I bought 4 restaurants off a guy. His father had owned it for like 30 years. His father passed away. He took over. He had no idea what he was doing. Yeah. And 6 months into these 4 restaurants, he was about he's about $700,000 in debt. Hadn't paid the IRS, hadn't paid the state taxes, hadn't paid employees, the businesses were phenomenal. When I took a look at his P&Ls, because that's the first thing I always do, I could see that it was a solid business. It had revenue and the margins were in line, but he was just a poor owner and making bad decisions. That's called a distressed owner. We were able to buy that business for pennies on the dollar, and we knew the day we bought it that it would be successful, because all we had to do was stop making the mistakes he was making. Oh, wow. So if you can find businesses that are a distressed owner business, not a distressed business, then you've got something that has real value. Businesses that are in distressed are a different deal, and they're much harder to turn around. So I tend to shy away from distressed businesses, only distressed owners when I'm buying.
Yeah, I mean, yeah, that makes perfect sense. Absolutely. But then you would have to kind of identify when you look at the P&L, you would look at, because it's kind of tricky. You look at other people's P&L and you say, well, what's that? like? You have you're making, I don't know, like $500,000, and then you have $300,000 in admin fee, and then just oh yeah, that's because I paid myself the bonus and stuff like that.
Yeah, add backs.
You have all kinds of other personal stuff that seem to be in there, or things that are not in line. So how you kind of have to readjust these numbers, these P&Ls to be more realistic, right?
Yep, we have to take the add backs out, right? So if the owner is acting as a primary manager in the company, you've got to add that salary back in as an expense. Yeah. I'll give you one. I just did a keynote speech for a cleaning franchise called Molly Maid over in Nashville. And they asked me to come in and talk on P&Ls for their owners. And I said, that's great. I need 6 owners to send me a copy of a P&L. Yeah. And so they did. And I broke all the P&Ls down into 7 different categories of expense lines, and then put in your revenue and then your margins at the bottom. And I painted a very, very clear picture on the ones that were doing well versus the ones that weren't, and exactly why they weren't doing well. And the answer to the folks not doing well is, based on everyone who's successful, this is all you need to do is change this line item, and this line item. You're overspending here, you're doing this wrong, and you will have the same results that the people who are making a lot of money. Those P&Ls are just magic. Now, like in a restaurant, I can tell you there's only 4 numbers that matter, right? Your revenue. If you don't have revenue, nothing else can be fixed. And then it's your liquor cost, labor cost, and your food cost. So if I have revenue, all I need, and I'm looking at your business, all I need to do is look at labor, food, and liquor, And if I can adjust those numbers because they're out of whack, I know I've got a successful business. If those numbers are in line, then there's another issue. Or if there's no revenue, then there's an issue. So that's how you do an analysis on something like that. No different than I did the cleaning franchise. As long as you know the base numbers you're dealing with or percentages, you can analyze any P&L to tell you if it's a good business or not. So
but in order for you to do this, you need to have some experience in the restaurant business, because you would need to know that this liquor cost based on the number of table turns and stuff like that is out of whack.
So here's what's interesting about that, right? So if you're not a restaurateur and you want to buy a restaurant, clearly you need to have a partner that understands restaurants, right? So you find somebody that's a restaurant kind of person who understands those numbers, and the two of you go in, take his data, analyze it against that P&L. That gives you something you can invest in. Then you let them run it. And now you're an investor and not in there running it.
So when you're investing in, you're buying this new business, I mean, you don't want to be stuck in it, managing it day in, day out. So what do you plan on having, on stepping out of that business, and how long does that take?
If I'm buying a business that I don't have experience in, then either I need to make sure that the team in place can run it, and all they really need is an owner, operator, and somebody to look it down at 30,000 feet. Or I need to bring in a partner that can run that business for some type of equity stake, whether it's sweat equity or cash equity, it doesn't matter to me. But I don't run businesses anymore. That's not what I do. I'm too ADHD, quite frankly. I have to have people help me. And I will tell you, Eric, I've made the most money in businesses that I had partners, because I know what I do and I know what they do. Back to the E-Myth, right? Get the person in there that can do what needs to be done, and let me just sit up here at 30,000 feet and look down. So if you're going to try to do everything yourself in a business you have no experience in, you're probably going to get in trouble.
That's true. Well, Brian, so we're about to wrap up here. So if people want to reach out to you, they want to get your advice, or they have a business they want to sell, or a restaurant, how can they reach out to you?
Easy. My website, it's www.brianwillmedia.com. Simple. My podcast, my books, guest appearances, speaking, everything's on there.
Okay. And your book is called The Dropout Multimillionaire, right?
Dropout Multimillionaire. Yep. Just type that in Amazon. You'll see me all over the place.
I say multi.
Oh, anybody can be a millionaire, Eric. You got to be a multimillionaire these days. Okay. True. Last funny story. I sold my first business for $1 million. You think you're rich if you're a millionaire. If somebody gives you $1 million, by the time you pay your taxes, and I paid my house off and a couple of credit cards, I had like $100,000 left. What are you going to do with that? Nothing. You better be a multimillionaire today.
That's why I say, it doesn't matter how much money you have, you're always short a couple of millions.
That's a fact.
All right. Well, Brian, it was a pleasure speaking with you, and have a good rest of your week.
Thanks, Eric. Appreciate it. It was fun.
Thank you for listening to Break Away from the Rat Race with your host, Eric Martel. If you want to share your story and experience with our listeners, please message us on Facebook at Break Away from the Rat Race. Also, please subscribe to our YouTube channel and our podcast on iTunes.